Hello and welcome back to your South King County real estate update. My name's Sarah Eggleston with Stone Egg Realty at Berkshire Hathaway, and I am back to deliver your real estate news for the month. Go ahead and jump right on into these slides. All right, so it is June 2025. Summer buyer and seller guides are officially here. So I have a home buying guide, a home selling guide, and a first-time home buyer guide. So if you are interested in any of these options, please reach out. I'd love to get one over to you. I can send a hard copy in the mail, meet up with you, send a PDF over. I can get it over to you however you'd like. So into the news. Seattle area homebuyers skittish amid high rates, economic uncertainty. So the Seattle area housing market has been particularly sluggish for this time of year as far as homes that are actually pending, but the slowdown reflects the elevated mortgage rates and economic uncertainty in our environment right now. Buyers are still battling it out in bidding wars for some homes, and other homes are just sitting on the market waiting for that buyer. Pricing is everything right now. And honestly, the market's a little bit weird right now because some homes are selling super fast, others are just sitting around. It seems like each home is its own separate marketplace completely. I had a listing come on the market a couple days ago, and it was particularly difficult to price because I was calling other agents who had active or pending listings in that area, and it seemed like everybody was telling a completely different story about what was going on in the housing market as it related to that particular listing. It is all over the board. So pricing is key right now. Those homes that are priced accurately are just going so fast, and the others are just sitting around waiting for the right buyer. While the early months of this year saw an uptick in Seattle area home sales, deals dipped in April as President Donald Trump announced new tariffs, plunging the stock market and discouraging some shoppers. By the end of May, pending single-family home sales had bounced back a bit, but plenty of buyers continued to play it safe, and that is from monthly data from the Northwest Multiple Listing Service. And more sellers put their homes on the market last month, but more of those homes were still waiting for a buyer when the month ended, a sign of cooling buyer interest. So that is honestly really great news for buyers out there. Buyers have had it tough for the past several years. Like, it has been rough out there for buyers. There was very little to choose from relatively, and now there are way more home options to choose from. Like I said, a lot of them are kind of going a little bit slower, so you may have a second to think about it rather than just like, okay, I'll take it and throwing an offer in. Home buyers had more negotiation power in May than any May on record going back to 2018. So things are way better for buyers right now than they have been in a very long time. Median home prices dipped in some areas. It's all over the board. In King County, home prices were down 4% from April and 1% from May of last year. So home prices in King County are cooling a little bit. East Side was down 4%. Prices also dropped from a year ago in North and South King counties. So it's really just all over the board as far as what is happening in the market. Being super hyper local and getting area specific about where you're shopping, or if you're trying to price a home, just know that it's a different market from neighborhood to neighborhood, region to region. It's all over the board. If we expand our reach and look outside of King County, Snohomish County was up nearly 1% from a year earlier, Pierce County up 5%, and Kitsap County up 2.5%. So if we go outside of King County, home prices have gone up. But in King County, overall, prices have softened ever so slightly. And you can see that here we have a downtick in King County from last month, but the other three counties in the region are following the normal trend we'd expect to see this time of year for home price activity. And May median home price, here's that on a chart. The dark blue is this year, the light blue is last year. So Seattle's ahead of where we were. The rest of King County is slightly behind or about the same as it was 1 year ago. For condo sales in North King, they are ahead, but everywhere else has softened slightly on home prices. And if we look at the number of home and condo sales for this year compared to last year, dark blue again being this year, last year outpaced this year in pretty much all areas. Southwest King was about flat, but there has been a pullback in home buyers going pending and purchasing properties overall in the region for both condos and single family homes. I thought this was especially interesting. If we compared last month to this month, last month, the dark blue was this year was way outpacing where we were last year in Seattle. And then this month, it's huge pullback from just 1 month ago. Same with the east side. There's a lot bigger gap between what we are seeing this month compared to last year versus last month compared to last year. So I just thought this was a pretty telling tale. Our spring home buyer market came early and is leaving early this year. Nationally, inventory topped $1 million for the first time since winter 2019. So the white line is this year, the red line, this is 2020, the beginning of the pandemic. And since the beginning of the pandemic, we have been short on our average home supply in the area. Inventory's just been low for the past 5 years. But that crossed over this year. We are surpassing in 2020 where we had that inventory start to dwindle down. So we are getting more inventory back in the market and heading towards a more balanced market. Regionally, in the West here, we have 10.8% more inventory than we did pre-pandemic from 2017 to 2019 average. And then we are ahead 40.7% year over year on the West Coast here for homes since last year. Our year over year number is 40.7% higher than last year and 10% higher than the pre-pandemic years, which was our last kind of normal years. And that is a stark difference from other areas in the nation. The increase in inventory is also promising and supports long-term stability in the housing market. As wages rise and households are formed, such as through marriage and bringing in dual incomes, this influx of inventory returning to normal levels provides an optimistic outlook. And that's from the lead analyst at Housing Wire. But we're not really expecting a housing market crash at all because we are in a deficit of homes still. While a lot of people are having trouble affording the monthly payments that it would take to purchase a home, we are way underbuilt and have been for many years. 2018, 2019, the deficit just increased significantly. We've seen a lot more new homes being built, so that is a huge part of the reason why this bar is not as extreme as 2023. We don't have our 2025 numbers for this yet, but we have been underbuilt for almost a decade. We did have a surplus of homes coming out of the housing crisis in 2008. So 2013 and 2016 are notably oversupplied, but then builders stopped building. So there were way too few homes built throughout all these years, and we are still trying to make up that deficit. At a 2024 rate of construction relative to household formations and pent-up demand, it would take 7.5 years to close the housing gap, and that's according to Realtor.com. Price reductions. We've been seeing more price reductions than we have in recent years because of more homes coming to the market, fewer buyers out there, and sellers getting a little too overzealous on pricing their homes. 18% of homes in Washington that were listed did reduce their price. The rising share of price reductions suggests that a lot of sellers are anchored to prices that aren't realistic in today's housing market. Today's sellers would be wise to listen to feedback they're getting from the market. And that's from Danielle Hale, the chief economist at Realtor.com. And sellers are pricing high based on comps from the past rather than current demand. Today, list price growth is accelerating while sale price growth is decelerating. Back in 2020, both were accelerating, and that is from Redfin. So we're just at a turning point in the market right now where we are having more homes come to the market. Sellers are looking at what happened last month. I mean, we saw that difference in the number of home sales last month compared to this month, and they're pricing their homes based on what happened in the past. But we need to keep in mind what is happening in the market currently to price homes adequately. We're not seeing the prices that were supported a couple months ago supported now. Sellers want more than buyers are willing to pay. So the median sales price is in green, the median asking price is in blue. And we haven't seen a gap between those two this big for at least 5 years. So that is just something to keep an eye on, is sellers are being aggressive on pricing their homes, and then they're sitting on the market and having to do those price reductions. And with fewer buyers in the market than we had the past couple years, then that is not a great game plan for sellers. A couple more quotes here. When buyers and sellers are on different planets, one side eventually has to give in, and it's looking like it's going to be the sellers this time. Rising inventory, price drops, and seller concessions indicate that this is already starting to happen, and sale price growth will likely continue to slow as a result. And that's the senior economist at Redfin. And then the best way to determine your selling price is to talk with an expert and get a pulse on the current market. Remember to consider the differences between your home and others that recently sold. Be realistic about your home and what the market could net you based on its condition. And that's from homes.com. And into our hyperlocal breakdown. For new listings coming to the market, you can see this huge increase here for pretty much all areas, but Renton is the standout here, almost 33% higher for new listings coming to the market than we were a year ago. For homes for sale, that is also increasing. So this is new listings that have come to the market plus those that are on the market from prior months. Kent up 51% from 1 year ago. Auburn up 44% from a year ago. Huge differences. Federal Way up 5%. So not as drastic in Federal Way as it is in the other areas. But keep in mind, there are more homes available for sale right now than there has been in a long time. For pending sales, Kent actually ticked down from last month, which is not exactly what we'd expect to see this type of year, but the other areas did increase. So overall, King County has seen a decrease in pending sales, but Renton, Auburn, and Federal Way have had an increase, both from last month and from 1 year ago. Median days on market, we're actually in this area not seeing the huge average days on market times that we are in other places in the county. Kent was 5 days, Renton, Auburn, and Federal Way, all 7 days on the market. And median sales price is down 2.5% in Kent from 1 year ago. Auburn and Federal Way pretty close to on par, and Renton up 1% from a year ago. So it is very area specific what's going on. Like I said, it's almost like each house has its own completely different market. And last month for mortgage rates, we were at 6.76 for our weekly average and 6.89 for our daily last time we met. And this month, the average rate for this week is 6.81%. And we have been seeing a gradual decline week over week for the last 3 weeks. It's been very gradual, but we are now at 6.81% for our weekly average rate. While home prices remain elevated, market conditions are gradually tilting in favor of buyers thanks to rising inventory, longer time on market, and climbing price reductions. And that's from the senior economist at Realtor.com. For our daily rate, we're at 6.86, which is down slightly from yesterday, but we are holding pretty steady on rates overall. It's been gradually ticking down the last week or so. We've seen less volatility in the past week or so than we have other times recently. And if we look at that over time, we had this big dip down in September, and then we've been up and down and up and down. And so now we're kind of like hovering just between 6.75 and 7, but we're seeing a lot less volatility in recent weeks. And those summer and buyer seller guides are available. Or if you want your first time home buyer guide, please reach out if you'd like any of these materials. They have a ton of valuable information in them. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I'd love to have a conversation with you about the market in your area or an area you're interested in moving to, and just start that dialogue, answer any questions that you may have. Thank you so much for joining me for your South King County real estate update. I will be back next month with your monthly local update. And I hope you have a fantastic month and happy summer. See you next time.